Hello, this is Quandre Invest. Today I'll be talking about the earnings as well as the market reaction over this past week or so. So this past week has been an extremely volatile one. We've been down around basically 7% from all-time highs, and the Nasdaq is already in correction territory. So will we continue going down even more? No one knows, but hopefully it does. So it gives us more buying opportunities in the future. But let's look at the earnings this week. So we've had this company over here. This company is Costco. Costco is down around 6% from its highs. But if you were to look at the valuation of Costco, Costco is extremely expensive. So Costco over here, Costco is currently trading at a 55 PE. This stock is just, it is a quality business, don't get me wrong. The business quality is extremely high, but I think for 55 PE over here, this valuation over here is just nuts. So I'm not adding, as in I don't think this is a buying opportunity for Costco, far from it. Maybe if it drops to around a 30 PE, then I will consider this company. But yeah, this drop is deserved. It deserves a multiple contractions. Next stock that we'll be looking at is AVGO Broadcom. So Broadcom, they reported decent earnings. The stock was up around 12% in pre-market, and now it's down only about now it's up only about 3%. So it just shows you how terrible the market sentiments are now. You have a company that was up 12% and now it's only up 3% in during the normal trading hours. So for Broadcom over here, I think the company is decent. It is competing with Nvidia and is competing well. And so if this AI story can continue, then Broadcom is definitely one of those AI companies that will benefit greatly from it. But the problem with Broadcom is I don't know how extensive their moat is. Similar to Nvidia, I also don't think that it has a very wide moat, because you have all these other companies creating their chips. So you have Amazon creating their own chips, you have Google creating their own chips as well, then you have Apple creating their own chips as well. So I don't know how extensive the moat is for all these different chip companies like your Nvidia, your Broadcom, your AMD. And that's why I'm staying out of those companies. I'm only buying the one that's the most predictable, and that company is ASML. Next, let's talk about the market in general. So the market is now basically down around nearly 8% from all-time highs. We're approaching correction territory already, and the Nasdaq is in correction territory already. So it is down more than 10% already. It's now down around 11%, and it is in correction territory already. I do think that the markets could go even lower from this point. It could go lower to around another 10% from here until the next support over here. So why is the market going down? The market is going down because there is too much uncertainty over Trump's tariffs. So Trump has been basically he's been imposing tariffs, and then he stopped the tariffs, and then you have a weakening economy as well with all the jobs data, and that is what is causing this market to crash now. The market is sort of like pricing in the fact that we will have inflation from Trump's tariffs, and we'll have a recession as well from Trump's tariffs, as well as all the layoffs that Doge is doing. But if you're a long-term investor, I don't think this dip is any worry at all. In fact, you should be adding to your positions now, especially with some discount. So you have like Amazon over here, which is down around 20% from its highs. Amazon is already down 20% from its highs, is already in a bear market already. So I think this drop over here is a buying opportunity if you're a long-term investor. But of course, if you're a trader, then maybe don't add into it yet, because we could go down even more. And yeah, if you zoom out, you block out all the noise. This market sell-off so far has been only been 7%. It's nothing. So we could drop even more. We could drop another 20% from here. But just buy on the way down and average it out, and it will work out. Of course, don't deploy your cash all at one go, because it's not gonna work that way. You're gonna be burned that way. But it's a buying opportunity now. You can add to your positions. There's a company that is interesting to me right now. This company is American Express. So American Express, it works differently from Visa and MasterCard. They have around 66% of their business, which is similar to a Visa and MasterCard, where they charge a transactional fee for all the merchants that use their card. And then the other 33% is sort of like bank. So they issue cards, they issue credit, they lend people money and all that. So American Express is one of Warren Buffett's best buys, as he claimed. And this company over here is down around 20% from its highs already. So the company is guiding about 15% growth over the next few years. And I do think at a 19 PE now is presenting a decent buying opportunity if you're looking at a stable growing company. Of course, there are risks with this company. There's consumer risk, credit risk, and all that. But Warren Buffett is owning it. So I think it is decent right now. Next, let's talk about Tesla. So Tesla over here is down around 50% from its highs already. It went up after elections, after Trump won, and then now it's down around 50% from its highs. I think this company, The problem with this company is it is trading too much on stories and too little on fundamentals. So if you have to look at Tesla's fundamentals, it is terrible in every metric. You have a company growing here at 1%, trading at 100 PE, losing net income, dropping net income of 50%. And yeah, this company overall, I just think it is an avoid in terms of if you're a long-term investor, if you're a value investor. I think this company is an avoid on every single metric. This company is trading on one guy, and that guy is Elon Musk. So whenever Elon Musk does something, this company just goes up. Whenever Elon Musk does something wrong, and then the company just comes down. So for me, Tesla is an avoid. Of course, if you're trading this stock and if sentiments turn soon, then this stock could rocket up another 30-40% from here. But for me, it is a strong avoid. I won't be touching this company. And yeah, Tesla bulls. If robotaxi becomes a massive thing in the next 2 years, then congratulations, you have a $2 trillion company stock, which is around a 3x from here. But if you don't have that, then this company is going down to zero. Not zero lah, because there's Elon Musk. In the midst of all this chaos, there has been one company that has held resilient over these few days, and this company is Apple. So why exactly has Apple been so steady over the past few days? It's barely down from the highs. So it is because Apple has not invested in AI. It is the only Mac 7 company that is not creating this AI narrative. So you have all the other AI companies, you have Amazon, Microsoft, Google, going down and down and down because the story behind all those companies is AI. But for Apple over here, it hasn't released any AI product yet. It is the company that is not doing anything for AI. It is the slowest growing one. It is the one that I am not interested in at all. But yeah, it's held resilient over these past few days, and I'm gonna have to congratulate all the different Apple shareholders over here. In the grand scheme of things, the market has been up 20% plus for 2 years already. So a correction is likely to happen soon because valuations are quite overstretched. So over here, the Nasdaq, I do believe the next target will be around 1,600, 16,000, which is around a 10% down from here if we have a true correction and a true crash. But yeah, of course, the market, this bull run may not have ended yet. Maybe we're not at the top yet. But if we're at the top, the next target will be around 16,000, and that will be the time for you to load it in if the market ever gets there. Don't be fearful when the markets come down. You shouldn't be feeling anything today. It doesn't matter. If the markets come down, let it come down. It's gonna be a time for you to start adding to your position. So just be prepared, have some cash so that you can add to your positions when the market comes down.